This just in, breaking news. Canopy is gonna buy Acreage, but wait, there is a catch. And another breaking news, Amazon is gonna exit China. Does this mean Mr. Jack Ma and Alibaba have won? And lastly, a research firm is saying that Apple is gonna miss their iPhone estimates. Well guys, welcome into the Financial Education channel. If you're new here, I am Jeremy. We gotta talk about some stocks making some moves here today, okay? Now in terms of the stock prices of these four stocks we're talking about here today, Apple was up on the day around 2%, good day for Apple. Amazon didn't make much of a move at all. Canopy was up over 2% today and it's up over 6% after hours. And in Acreage, we should see a big pop when that one opens tomorrow, okay? First up here, MJ Giant. I can't say that W word, guys. I might get demonetized. This happened before, okay? MJ Giant, Canopy Growth, closing in on a deal to buy Acreage Holdings. The two companies have been in talks for about 2 weeks and were scheduled to speak on the phone Wednesday to finalize the agreement. Sources familiar with the matter told CNBC. Shares of Canopy rallied more than 10% after hours. As we looked at as of right now, at least it's up about 6%. And in Acreage, we should see a big move up there. But then there's almost like this confusing catch with this situation, okay? Here's what we have going on. So all of a sudden, Market Watch publishes this article, like literally about 10 minutes ago, says Canopy Growth isn't buying Acreage Holdings. It's buying the right to buy Acreage Holdings. Canopy Growth is not outright acquiring Acreage Holdings, as reports said Wednesday, but is preparing to pay billions for the rights to buy the US-based MJ company. A source familiar with negotiations confirmed Wednesday afternoon that a Canopy Growth deal with Acreage was 98% done, as in it's pretty much almost a done deal, okay? Though the final price was still being worked out. Acreage had a market cap of around $921 million as of Wednesday's close, according to FactSet, but the deal will be worth several billions in Canadian dollars, the source said. If Canopy Growth were to outright acquire Acreage, though it would run afoul of the rules of the Toronto Stock Exchange, where its shares are listed. The TSX does not allow companies to own stakes in businesses that run illegal operations, which Acreage technically does because MJ is still federally illegal in the US. Canopy would also have to give up its US listing, which was cross-listed from the TSX, and instead look to Canadian Securities Exchange and over-the-counter trading in the US as publicly listed US companies do. Instead, Canopy will purchase the rights to buy Acreage when or if MJ becomes federally legal in the US as an agreed upon price, according to the source. So essentially, Canopy will buy Acreage possibly someday, but first it has to become federally legal in the States for this full deal to go through. So this is a very interesting thing, and you gotta think, what if MJ never did actually get federally legalized in the US? I would say we're gonna eventually get there, but like, what if it doesn't happen for 10 years? Then Canopy's basically has the rights to buy them, but it's like takes 10 years in the future, right? And meanwhile, you know, Acreage's business could have fundamentally changed. It's going to be a very confusing deal. We're going to have to see what happens here. So it looks like Canopy investors are very excited about this, needless to say, by the upwards move in Canopy stock price after hours. But needless to say, we still got to wait for MJ to get federally legalized in the US before this deal can even go through. So a very confusing deal, a very tricky deal to kind of get done here, because it's like, okay, what if MJ doesn't get federally legalized for, let's say, 5 years? What happens in that situation? What if it never does? Like, it's a very confusing situation. So very interesting. We'll have to see how all this works out. But needless to say, it's a massive, massive deal in that space because there aren't a lot of really big players, but Canopy and Acreage are two of the bigger players out there, especially Canopy. That's a monster one, okay? Just to kind of show you guys some reference here in regards to Canopy as far as its size, market cap of nearly $15 billion on Canopy. As of tomorrow, it will be well over $15 billion market cap. I don't think there's anything over $10 billion in the MJ space other than Canopy from my understanding. Let me know if I'm wrong on that in the comment section. I don't believe I am. Next one is around Amazon. What is this? Oh. Next one is around Amazon. Amazon to close domestic marketplace business in China. Sources, this is coming out of Reuters. Amazon Incorporated plans to close its domestic marketplace business in China by mid-July. People familiar with the matter told Reuters on Wednesday, focusing efforts on its more lucrative businesses selling overseas goods and cloud services, a la Amazon Web Services. In the world's most populous nation, shoppers in China will no longer be able to buy goods from third-party merchants in the country, but will still be able to order via the United States, United Kingdom, Denmark, Japan, via Amazon's global store. Amazon expects to close fulfillment centers and wind down its support for domestic selling merchants in China in the next 90 days here. So this is interesting to me from two fronts, okay? The first front is it kind of does show that Jeff Bezos and co are focusing more on Amazon's profitability than ever thought of before. Amazon in the past has been just, a business that is just like, let's just grow revenue to grow revenue's sake. And someday, hopefully the profits start to pour in. And a move like this kind of shows that Jeff Bezos says, you know what, this is something that's probably losing us money. This is taking time and attention away from, key executives that we might need on other things. Let's go ahead and let's shut this down, okay? That's the first part that's very interesting. Amazon's more focused on profits than it certainly has been in the past. And the second part is this just kind of shows that Alibaba just flat out, beat Amazon in the Chinese marketplace, especially with Taobao and Tmall. And then on top of that, you got JD.com, which is a massive player in the market. Then you got a ton of other smaller players, but it just shows the dominance of Alibaba and how hard it is to really beat Alibaba in China. I mean, if Amazon can't come in there and have much success, then who can? Okay, that's really the question. If Amazon can't come in and kind of, beat up on Alibaba, then who can? Because Amazon's a company that usually comes in and takes, eats everybody's lunch. So very interesting on a couple fronts there. Anyways, let me know what you guys think about that in the comment section, all right? Now to Apple. Apple's Q1 iPhone shipments miss estimates. I saw this on Seeking Alpha today. It says Apple's Q1 iPhone shipments totaled 33 million to 42 million units compared to 40 million to 45 million supply chain sources expected in January, according to OTR Global. The miss was due to weak demand for iPhone XS and XR models. Q2 shipments are expected to be between 28 million and 33 million units, down 21 to 24% on the quarter. And obviously Apple is set to kind of release their earnings here within the next couple weeks. So this is interesting. Now, is this something that's going to affect Apple stock negatively? Is this something that's going to take Apple stock down? Well, obviously this report came out during the trading day and Apple still finished up about 2% on the day. So first off, if you're thinking like this is going to have some super negative effect around Apple, it's really not, okay? The other thing is there's nothing expected good right now out of iPhone models. This upgrade cycle is basically only getting two kinds of customers into, upgrading in this particular cycle. It's people that absolutely need to upgrade because their old phone died or their old phone just isn't working good anymore. They had an iPhone 6 or 6S or a 5S or something and they just have to upgrade. They're just like at that point where they're just like ready to do it. Or it's the folks that, always have the newest iPhones or things like that. They just always want the newest iPhones, all right? So that's kind of the people you have upgrading and outside of that, it's just not a big upgrade cycle. We won't see a huge upgrade cycle in my personal opinion until 5G, and we're still at least a year plus away from 5G, it looks like. But the important thing is people are very excited about Apple and Qualcomm deal now getting that done, and it looks like Apple should be able to get 5G iPhones not in the market probably this fall, but next fall for sure, which is great thing for Apple overall. And if you're an Apple shareholder out there, you're investing in this company because of all the growth metrics they have around them, services and all those sorts of things, and future 5G growth ahead of this company. And here's the other thing about Apple stock. You look at Apple here, it's a company that trades at, trailing P of 16.5, forward P of 15.5 roughly, right? So one, that's way under where the market's trading at. Two, you can make an argument that literally Apple is the safest company you could possibly invest in. We could have an argument about that, and maybe the safest. You look at something like Coca-Cola. This is viewed as a super, super safe stock, right? Is Coca-Cola really safer than Apple? Maybe a little bit, but not that much, and it trades at a 21 forward PE. Procter & Gamble, they sell paper towels and toilet paper and stuff like that. maybe a little safer than Apple, but I'm not even convinced about that. Trades at a 22 forward P, a 20, almost a 26 trailing. And you look at Apple, super safe business model, unbelievable ecosystem. Their customers are extremely sticky there. And obviously they have the services, which is recurring revenue, and this company trades at a 15.5. I'm not convinced Coca-Cola, Procter & Gamble, Johnson & Johnson are that much safer than a stock like Apple. So anyways, that will wrap up today's video, guys. Let me know your opinion on anything we discussed in today's video in that comment section. As always, thank you for watching. Have a great day.